Hi everyone, welcome back. I've had a few requests to go back over the basics of the high-low strategy for some new members. So I'm just going to go over the logic about what we're doing and why it works, and then I'll go sort of into the mechanics of how we enter and exit. So what we're trying to do here is we're trying to find the high of the week and sell, and find the low of the week and buy. Okay, and if we can do that every week, okay, I'm just going to mark out some highs and lows here. Okay, you can see that the trades that would survive the longest are at these extremes. Okay, they're less likely to be taken out by a retrace, and they're also offer the best risk to reward. And the real advantage of this is that if you can hold these trades, you can stack them up and eventually get a stack of very big wins. In a way, it's kind of like position trading, okay, where you build a position with the trend, but the difference here is we're not trying to predetermine what the trend is. All we're doing is we're taking as low a risk entries as possible and then securing those highs and lows. Okay, so how do we do that? How do we find the high and the low of the week? Well, we just go about it in a methodical fashion. Now, we're usually told that what we should do is we should use analysis to determine where the high and the low would be, and the problem with that is that you have to make a lot of very difficult decisions and assumptions, and even then the market has enough sort of randomness in its movement that it's very hard to do that accurately. So we take the different tact of basically continuing to take entries until we secure those trades. So I'm trading the H4 time frame at the moment. When we're trading H4, we're looking to secure the high and the low of the week. So I'm just going to go to H4 now and show you how we do that. Okay. So I'm just going to use last week as an example here. So once the week starts on H4, we're effectively at the high and the low of the week, so if price closes down here, okay, we're at the high of the week, price closes down. If we break out of this, we're going to take an entry short and we're going to place our stop over the high. Okay, so now at this point we have secured the high of the week and we've sold it. Okay, then we see price moves down here. Here we've made a new low for the week. Here we close up and then we break out. So here we take a long, and now we've secured the low of the week. So now we have two trades open, a short from the high of the week and a long from the low of the week. And then we're just going to hold those trades until we make a new high. And as you can see, price ranged inside of that, and then eventually broke down here, stopping out our long from the low, and that remained the case up until here, and we had a new low, a bar close up, and a breakout. Okay, so we place our stop below the new low for the week. Now we have a short from the high and a long from the low, and then price broke down again, stopping out our long again, and then we finally got the low of the week breaking out right at the end of the week there. Okay, so you can see it's just like a mechanical process of you keep taking the new highs that turn around and break out short, and the new lows that turn around and break out long. And that essentially is the entry technique. So we're not using any analysis there. We're not making any assumption about the size or shape of the candles. We're not making any assumption about support and resistance or trend. We're just trading the current highs and the current lows of the week. Okay. Now, how do we exit these? Okay. My preferred exit at the moment is I wait until I have either two highs or two lows and then an opposing signal. Okay, so what exactly does that mean? Let me just show you here. I've obviously got to go back a week to be able to get two highs and two lows. So at the end of this week of trading on the H4, I would have secured this high of this week, and I think my current low was there, and I think it just got tapped out at the end of the week. Okay, so at the end of this week I've just secured a short from the high. That's the only open trade I've got. And then we've just gone through this week and we know that we ended up with a short from the high here, and we ended up with a long from the low here. So you can see here when this long from the low sets up here, we have two shorts from the high. One from the previous week and one from the current week. So at this point, we can start to look to manage our position. And we have a few options here. And here we do have to make an assumption and a guess. And there's no right answer to this. It's more about experience and feeling and how your trading's, how your results have been recently. There's no right answer to this, but the whole idea with stacking two trades and then waiting for a signal in the opposite direction to those two trades is that it forces you to hold your trades for longer. Okay, and you find that it ensures that you get these big wins and you get some medium wins as well. Okay, obviously doesn't always work out quite as sweetly as that, and you do have to take some drawdown and some losers to get to that point. But I can assure you, if you back test this, you'll see that there's lots of opportunities to average winners bigger than your average losers and make a net profit over time. And that's the whole thing here. We're not trying to be accurate. We're not trying to do any of this pinpoint trading, high precision trading, because we don't think that. Well, I'm not going to say when we don't think it's possible. We think that's a harder way to go about making consistent profits. Okay, we consider this an easier way of trading because you're not having to think about. You're not having to make lots of difficult decisions on entry. It's very mechanical. So the only decisions you need to make are your exit decisions. And this waiting for two trades to be stacked and one opposing signal just ensures that you avoid the common mistake of closing too early. Because as an example, over my last 238 trades, trading this way, my win rate is 49.2%. So I need to be sure that my average winner is larger than my average loser, okay? Because I'm winning about half of my trades, okay? And this is a really nice, fairly mechanical way of doing that. To go into a bit more detail on the exit as well, at this point when we have a long from the low of the week set up, I have two trades stacked short. Here are my options, okay? I can leave those trades stacked short and just take the low and let it play out again, okay, waiting for a new high or low of the week. Or I can close the inner trade and leave the high and the low open. In this instance, it wouldn't have been a bad idea because then price continued to drop, taking out this low trade, but adding to my short trade from the high, okay? And then the third option, of course, is to close both of the shorts and just leave the long open. I'm just going to go back and show you a few more examples of that. Okay. So if we look at the previous 2 weeks, You can see at the end of this week you would have had a long from here and a short from here. Okay, only one trade long and one short, so no exits. And then at the end of the next week you would have had a long from the low of this week, and any shorts would have been stopped out. Okay, so at this point, when you have two longs here, okay, as soon as we get another signal, then we can exit. Now you might want to say, well, you know, this is already a nice big win on these two longs, you know, if that is the case, then by all means exit there. The idea of waiting for an opposing signal again is just to control that urge to close your trades too early. Let me just show one more example. Okay. Here, the previous 2 weeks, you would have ended this week with a short from the high and a long from the low. And then you would have ended the next week with a short here, excuse me, and a long from here. And as you can see, at this point we have two shorts from highs, excuse me a minute. Two shorts from highs, and here a long sets up. So here is a good place to manage your position. Either close one short or both shorts, or leave them both open if you've got a feeling price is going to continue down. Oh, excuse me, I've got a horrible tickle at the moment. So that's it. That is the basics of the system. Now, obviously, there are secondary trades, that I call reverse trades, that you can use as well. For me, just trading the high and the low is a nice simple way to trade, especially on H4. You've got very few decisions to make each week. The stacking of two trades, I know when you go and back test this, your gut instinct is going to be to say, well, if I took the long from here and it goes up here to a short, surely I should just take profit there, and then this short down to this long, I should just take profit this one, and then from this low I should just take profit here. Now, your gut instinct and visually it will instantly look like that is a more profitable way of trading, and although it's got a profitable expectancy trading like that, if you stack trades, then your net profit will be larger over time based on testing previous market movements. So, you know, hopefully that's a little bit of it'll give you a sort of a core understanding of what we're doing and why, and you know, if there's still elements that you're undecided about, then please, you know, post some comments and I will answer them. I just want to say one final thing is, don't get too caught up in the mechanics of what we're doing and trying to think too deeply about how you can improve it. You know, the market is essentially moving up and down all the time, and that's where our opportunity lies. And really, we can't control how much our costs are going to be, how many losing trades we're going to have taking these highs and lows. But if you back test and you just mechanically take all of the trades, you'll see that it's got a really nice consistent expectancy to it. So I hope that's clear. Like I said, comments below, and I will do some more videos soon.